If you cannot fly, then run. If you cannot run, then walk. If you cannot walk, then crawl. But whatever you do, you have to keep moving forward. Dr. Martin Luther King Jr. and great advice from MLK, my friends. Every day, 10 to 15 minutes, that's all we ask. And when you first start, you may be crawling, but 10 to 15 minutes a day, it adds up. It adds up, it adds up, and exponentially, before you know it, you will see results that start coming in, and it is beautiful. I was doing some writing yesterday, over the last few days, and again, I love to go to the future value of an annuity calculator, and I love to look at what time and interest do to money. Our goal here is 2% per month, 10 months out of the year. So you can have some losses in the meantime. You can have some months where nothing happens. But my friends, if you can take your practice trading account and you can grow it just 2% a month, that's nothing. We watch these weekly vertical crossovers where they go up 4, 5, 10, 20%. I mean, you can look at some of these that we talk about on a daily basis and you see it and you say, okay, if I could just make 2% per month, what does that turn into in just 10 months on average out of the year, taking into account some occasional losses? What is that per year? That's 20%. What does the rule of 72 tell you? Well, you take any percentage interest rate, you divide that into 72, and what do you end up getting? You get to see how quickly the money that you're investing doubles and doubles and doubles again. So again, take the number 20, okay, and divide that into the number 72. 72 divided by 20, 3.6 years. Every 3.6 years, the money that you're earning 20% on doubles. Now the opposite occurs, guess what? If you're borrowing that money, credit card debt, at 20% or more interest, your debt is doubling. It's working against you every 3.6 years. So I'm not Dave Ramsey, but I am on the side of convincing you to learn what we do here, to have simple, easy, attainable goals, and to focus on that. If you will just spend 10 to 15 minutes with us every day, my friends, the magic will start to come to you. Practice trade, it doesn't cost you anything. What it costs you is the most valuable resource you have, and that is your time, your enthusiasm, your energy. That's why we only ask for 10 to 15 minutes. But you wouldn't believe how many people won't do it. They won't spend 10 to 15 minutes. Oh, they'll try to spend an hour every time they get ginned up on something. Well, that isn't going to help you. An hour a week, 2 hours a week, 20 hours every month. No. It's 10 to 15 minutes every day. This is where you learn the nuance. Let's get into these charts. Enough about the theory and the philosophy. Everything is up for the day, including Bitcoin. Let's start with Bitcoin, up 5.20% for the day. Had a big down day yesterday. Look at this. 3 weeks of strong up movement. How did Bitcoin end? It ended, my friends, crossing over, going up. Weekly vertical crossover. Boom. How many of you were waiting for that? How many of you opened yourself a practice trade on Bitcoin with this latest weekly vertical crossover? Look at that. It's beautiful. It's the kind of crossovers we like. Price percent oscillator cross. Now, we would love it to be a much more substantial crossover because if we have a down week next week, that could pull right back through. But going for us is the fact that the derivative oscillator went green rather strong. So 3 weeks of up movement, higher high, bigger candle, nice wick on top, no wick on the bottom. That looks pretty. What about the 2-day chart? Not the best 2-day candle, much smaller than the prior, not as high as the prior, but again, things are moving in the right direction. Derivative oscillator is flat, not as good as we'd like. We'd like it to be higher, but charts are rarely perfect. Price percent oscillator is heading up. What do we see on the half day? We see where that half day is negative. Not the best thing in the world. It's because of that prior big down day I spoke about, where it touched right there on that 200 period moving average line and then sort of bounced off of it. Derivative oscillators -2. Now this is our smallest of all charts, so it means the least to us. What means the most is the weekly. Next to that is the 2-day, and those are okay. Weekly's better than the 2-day. 2-day's okay. Pay attention to it. Let's watch it. Let's see what Bitcoin does. That's what's up with Bitcoin. Let's go now to the S&P 500, up a little bit, 0.19%. And where are we on the price percent oscillator? Has it crossed over going up? Negative. Still a little bit below the 8-period moving average line. We did reach a higher high for the week a little bit. Green up candle. Things are moving up, but again, not enough movement for a crossover. We still have a divergence. We have price moving up, and of course, we don't have the price percent oscillator reaching a higher high, as it should if this movement was healthy. What do we see with the derivative oscillator, the leading indicator, gaining momentum? 2-day chart, we had that 2-day crossover going up back on Friday the 6th of August, last Friday. And of course, we've got movement as it heads up. This is the first day of the latest 2-day candle, so that's 5 days of movement right up that 2-day trend line. Price percent oscillator barely pulling away from the red signal line. Derivative oscillator positive. So that's decent for that kind of move. What do we see on the half day? Well, we see how it has moved up, paralleling that up move pretty much of the 2-day chart. Price percent oscillator pulling away from the red signal line a little bit. Derivative oscillator gaining upward momentum. So that's all well and good. That's where we are on the S&P. What about the Qs? We see that price percent oscillator flat, derivative oscillator losing momentum. We see, though, it's still positive. Both are still positive. Price is above that weekly trend line. We can see that the candle has slowly been getting weaker, smaller over the last 3 days. Did we reach the high of the prior week, 369.91? 369.56? No. And you can see subsequently the devolution of the derivative oscillator, losing momentum. 2-day, of course, we had that 2-day crossover going down. We saw where things popped up for 4 days, but have been sliding sideways pretty much since then. Up for the day a little bit, 0.35%. Price percent oscillator negative, derivative oscillator negative, losing downward momentum. So we're not in this trade going up on the Qs at the moment because that 2-day took us out what had been a successful trade that we had with that weekly vertical crossover. Let's look at the half day. We can see the half day moving up for the last day and a half. Price percent oscillator negative heading up, derivative oscillator negative, losing downward momentum. One thing I want you to get from the daily lessons that I teach going over these charts is the way I look at these things, the way I code them, the way I explain it to you. It's very important that you think this same way. And let me tell you, the best way to learn what we're doing is by doing it. How do you do that? You take your daily market worksheet every day. This is the weekly review and forecast, so you use the weekly market worksheet. And when you do a trade, you do a practice trade, you fill out the trade worksheet. When you get good and start doing real trades, you're still going to fill out the trade worksheet. Why? Because, man, that goes into your trader's almanac. Those are your crib notes. Those are your secret sauce. So again, make sure that you're doing that. If you don't know how to fill out the weekly worksheet, the daily market worksheet, and the trade worksheet, I'm going to put at the end of today's video all 3 of the trainings. We explain how you fill those worksheets out. And you might be saying, where can I get these worksheets? Look in your show notes every day, my friends. There are PDFs of those worksheets in your show notes. How do you get those show notes? Go to chartingwealth.com, sign up for free, subscribe, and you'll get emailed every day. The trainings that we do here at the channel with all that good stuff. Plus, we include every single day a special training for you. We have a special training, a few minutes for you to hone your skills. Let's talk about what's going on 20-year bonds. We see it as a down week for 20-year bonds. Red down candle, solid one, the first one we've seen since all the way back on the week ending the 21st of May. Price percent oscillator losing energy, derivative oscillator heading down, still positive, but we can see we blew through this week that beautiful, beautiful gold weekly trend line. What about the 2-day? Of course, it crossed over going down, led the way on that on Friday the 6th of August, down for three solid candles, 6 solid days. And then this latest candle is a green spinning top. This is the first day of the latest 2-day candle. Price percent oscillator still negative, lost some of that negative downward momentum. Derivative oscillator about flat, half day, moving up over the course of the day, up nicely, 1.58%. But of course, that doesn't mean a change in all the other stuff. So we'll watch and see if we're going to have what? What is something that's possible to have? Well, if we see a lot of up movement over the course of this next week, we could have a 2-day recross going up. How did that last one do for us? Beautifully, my friends. Somewhere around that 137, 138 mark up to a high of 152.71, and of course if you'd gotten out with that 2-day crossover going down somewhere around the 149, 147, 149 mark, not bad. $10 is not bad, is it? $10 over the course of June and July into right there at the end of July, beginning of August, not bad on a $140 something ETF, not bad at all. So again, we'll continue to watch, wait and see. Need you to practice trade these things if you want to be smart about what is going on. Lastly, we go to gold. Nice to see gold up for the day, but that doesn't make up for the big red down candle on gold. A big down week for gold. Price percent oscillator heading down, derivative oscillator negative. At the end of the week, lost a little bit of that downward momentum, but again, a red down candle. What about the half-day chart? I'm sorry, the 2-day chart. We'll get to the half day in a minute. We see this latest candle, first day of it, green open box up candle. Price percent oscillator still negative, derivative oscillator losing some downward momentum. So again, we'll watch and see where this is going to go for us. We go to, and again, hoping that gold's going to gain something and start up, but of course we just have that weekly hammering down hard. And we look at the half day, it did cross over in the morning heading up, and about the same in the afternoon, overall up 1.43%, derivative oscillator positive, price percent oscillator heading up. But can't wait for gold to bottom out, settle out, and then give us some strong up movement. That is where we are, folks, as we end the day on Friday. We sure appreciate you being with us. If you want to do what you can to support the free work we do here at the channel, become a Patreon supporter. Not only do you get our once-a-month live question-answer call-in session where we answer your questions, help you backtrack the stocks and ETFs you're interested in for practice trading, we also have for you each and every week 20 weekly vertical crossovers. We typically have 10 up and 10 down for you to practice trade. Really, really good stuff. Plus our 3-part series, Options Made Simple, the charting wealth way. You want to get into options? We have the best training on the internet. And it's for free for our Patreon members at any of the support levels. Help us out, support us. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.